The defining business decision wasn't starting one company. It was choosing to keep pushing forward without understanding structure, finance, or focus. That choice shaped two fast-growing projects and ultimately determined why both collapsed despite strong early traction. This is a retold business failure story originally shared on Reddit by user The British Are Come, created on March 24, 2019. The first failure began at age 22, not from an ambition to become an entrepreneur, but from frustration with stalled career progress. While working in a call center and struggling to break into IT, an opportunity quietly formed in the background. During downtime between calls, a management system was built using VBA inside Excel, the only tool available at the time. What started as a workaround quickly became a core internal system, eventually used by an entire department of roughly 200 staff. Despite this proof of capability, a junior developer role application was rejected. That rejection became the emotional turning point. Alongside the day job, casual buying and selling of PCs had already been happening. And soon after, an eBay seller offering insurance salvage laptops was discovered. Bulk purchasing followed, an eBay store launched, and momentum built quickly enough to justify leaving employment and committing fully to the business. When the laptop supply dried up, the company pivoted again, first into building websites, then custom software, and eventually mobile apps. A small team was hired, revenue continued to grow, and outwardly the business appeared to be progressing. Internally, however, foundational weaknesses were compounding. Hiring decisions were made without experience, finances were poorly managed, and time was spread thin across too many responsibilities. Lessons were learned, but always too late to prevent damage. Over time, unpaid obligations accumulated, particularly debt owed to the government. For several years, the situation was narrowly avoided through last-minute fixes, but roughly 8 years into the journey, those efforts failed. When asset repossession began, there were no remaining options. The first business ended not from lack of demand, but from lack of operational discipline. The second failure overlapped with the first. During the early years of that initial company, a separate project launched, a social network built specifically for the immigrant community. Growth was rapid. Within 1 to 2 years, the platform attracted over 100,000 users, relying entirely on word of mouth and organic sharing due to the absence of an advertising budget. The first major setback came when visibility and growth were disrupted by questionable dynamics on the source platform, whether from users, platform behavior, or both. Without capital to replace lost exposure through paid acquisition, growth stalled. The second, more structural problem took even longer to surface. For nearly 4 years, the platform existed without a clear identity or defined business model. By the time clarity emerged, attention and energy were already consumed by the collapse of the first business. At the same time, personal strain intensified. Contract work was taken on to survive financially, health deteriorated, and unresolved personal struggles compounded the pressure. Eventually, the combined weight of operational chaos and burnout led to an almost complete mental breakdown. The decision was made to shut the platform down, migrate the remaining community to Discord, and keep it minimally active while focusing on recovery. The story doesn't end with abandonment. Plans remain to relaunch the social platform with a clearer value proposition, a defined budget for growth, and a business structure designed to prevent the same failures from repeating. The core lesson across both businesses is consistent. Early traction can hide deep structural problems, and growth without clarity, discipline, and sustainability only delays failure. It doesn't prevent it.